We're going to call the meeting to order at 5:30. First item of business is the approval of minutes. We had two, special meeting on the 25th, and a special meeting on the 18th. I don't have them in front of me though. Do you have copies of them? The motion was made by Tom Strumfer.
No. Can't be.
Yeah, this was a shorty. No, it was not. This was a long one. This was the one Josh done.
We broke out.
Right,
I don't think it was here, right?
you were here. You're a motion maker.
Okay, it must have been here. I know the last one was.
Oh, listen, you said 2017 is going to be a positive year for stocks. It's in the minutes. It's official.
First quarter.
Hey Cindy.
So, I guess I'll make a motion to approve the minutes. Do we need to approve each separately?
Individually, please.
Okay, of Wednesday, January 18th, the special meeting.
Is there a second?
Yes, here.
Motion's been made and seconded to approve the minutes of January 18th. All those in, any further corrections? All those in favor, please say aye.
Aye.
Opposed, no? So carried.
I'll make a motion to approve the minutes of January 25th of the normal, oh no, also special meeting. Yep.
I second.
Motion's been made and seconded. Any discussion or corrections? Seeing none, all in favor, please say aye.
Aye.
Opposed, no? Minutes are adopted. Any public comments? Rand?
This is the first time I've ever been to a pension board meeting.
They're usually this well attended.
That's a good comment.
That's what I thought.
Gail, are you aware of any communications? By the way, you look rested in hand. Gail took an earlier flight to be back from her vacation for this meeting.
Wow. Thank you for that. Where did you go?
I'm not sure I would have come back from Key
I
West.
was gonna say, yeah, I don't know.
Squeeze in another day.
Absolutely.
All right,
So no communication?
no, gentlemen, you're up. How are we doing?
All right, pretty good quarter, shaped up to be a really good last 12 months. So why don't I dive in, everyone has a book, I'm gonna go right to page 2. I'll start with the flows. I do have a little bit of a breakdown which I always like to share, and then I'll hand it off to Bob, and we'll see the portfolio and then the performance.
I'm sorry, you said page 2 or tab 2?
Page number 2. Okay, so this is activity for the last 12 months. We started on 4/1/2016, $21,389,768. There were contributions of $1,254,148. Quick breakdown on that was $966,500 in employer contributions with $287,500 of employee pre-tax contributions. We had interest and dividends of $510,445. Withdrawals of $1,327,703. The breakdown on that is $1.2 million for participant or retiree distributions. We had $86,000 paid to Webster for trustee investment management fees. Actuarial fees were $26,400, and then we had a small amount of legal fees of $2,200. Market push for the 12-month period was a nice $1,678,067. And the account value as of March 31, 2017 is $23,504,726.
Any questions before I go ahead and start on my asset allocation?
It kind of looks like a pass-through with, we're taking 1.2 in and pushing out 1.3. So the only real growth we're going to be getting is on whatever's sitting in there, plus the market help. Now,
Our contribution should be going up next year.
yeah.
And the
Which
actual-
is why we
That's
changed.
budgeted
it.
for.
Yeah.
So that
That's why we changed it.
10.57 is the percentage of return.
That's
Yeah,
total
for the last
return.
12 months. Yeah. It's been a really good 12 months. But yeah, you're right, the contributions are pretty much supporting the benefit payments. We got around 76 retirees right now.
It's a little thinner than it usually is, right?
Yeah, I didn't include fund sheets this time. We just never really go over them, so. So if we look at the asset allocation, top left, we're at 64% equities versus the target of 60. We're at 31% on fixed income versus the target of 40, and we have slight position in cash at 4%. So right now, we think the prospects in equities are better than fixed income, so that's why we're overweight equities versus fixed income. Year-to-date through March, the equity market was up about 6%. Right now, it's up about 5% through halfway through April. The fixed income market has been quite volatile this year. We started at about a 242 on the 10-year treasuries, went to a 2.6 in March, and as of this morning, we were at a 2.20. So we did a full round circle, and we continue to believe that rates are going to be depressed for a little bit while longer, especially with all the geopolitical risks going on right now. And I don't know if
France and
anybody-
England.
France, England, North Korea, and then Tillerson just spoke this afternoon at 4 o'clock and said that they're looking at possibly having more sanctions on Iran. So just more stuff in the news that can affect the market. Oil sank about 3.5% today. And that hurt the market. The market was down and started selling off towards the end of the day. And then also with talks about the government possibly being shut down if they can't come up with some resolutions next week when they come back. But with talk about Iran, oil jumped a little bit after closing markets. So there's going to be some volatility coming for sure. I mean, we have elections in France coming up starting Sunday. Excuse me. And then Theresa May asked for a snap election in the United Kingdom. So there's a lot of stuff going on that's going to affect the overall market, especially globally.
And that, I'm guessing, is going to make us pull back a little bit from some of the international stuff.
Actually, international on a valuation basis looks very attractive, especially to the U.S. If you look at forward earnings, the U.S. is trading at about 19 times, which is pretty high historically. And we're finally seeing profit growth in Europe for the first time in 6 years. And it's trading at about 15 times, which is very low historically. So we're seeing some good earnings overseas. So I've actually added...
Despite the geopolitical stuff?
Yeah, I mean, there's geopolitical stuff, well, there's,
It's every day.
political risk here as well.
It's
Yeah.
been going on for years.
Yeah.
So just
Bottom
now,
line is what's in the checkbook at the end of the year. Right?
but more,
Profits.
with all the news outlets now, it's just much more out there. So, if you want to go to the next page, we go with the overall holdings. So nothing changed too drastically, other than I sold the currency hedge position of the EFA. So I just didn't think the dollar was going to strengthen much more as of right now, so I moved it all back into the EFA, which is unhedged, which has worked out. And then I added the T. Rowe Price Emerging Market Stock Fund. That'd be a good time to have some exposure in emerging markets. The dollar has stabilized along with commodities, which is very good for emerging markets. China's still doing quite well, so we wanted to take a position there. Any questions at all on that? On the fixed income side, we had a few bonds mature, which is why you'll see zeros. And then we had one bond that had dropped to under investment grade, so I sold that.
I think I got a short one.
No, you're looking at the old head?
Oh, I do, I'm on the wrong one.
Oh, no, you're good.
There you go.
Oh, thank you, this is what I... So where's the benchmark comparison? Forward backwards.
So if you want to go to return, you can do that. Page 5. In this-
No, I'm not gonna make you go out of order.
No, you're fine.
So this stuff is boring to me.
Yeah, so if you want to just get right down to the nitty gritty. Year to date, you can see we're at 4.26 versus 4. Yeah.
Quick question.
Yeah.
Not a huge deal if it's not a problem,
Yeah.
or if it is a problem. Would it be possible for you guys to throw on like our yield?
Yes, absolutely.
Okay.
Yeah.
Except just for me, I find that interesting.
Yeah.
All right, cool.
So on the returns page, 4.26 versus 4 for the year-to-date, which is just the first 3 months. The one-year number was 10.57 versus the benchmark of 10. And you can see the equity breakdown there, page 6.
Six, okay, yeah, there we go.
So the equities did 16, that's combining domestic and international. And then if you break it down further, the US equities did 16.59, international did 9.65, fixed income was at 1.68. So with the overweighting in the equities, it helped us outperform the benchmark for the year. 3 years basically in line at 6.34 versus 6.61, and then inception to date, we're at 8.69 or 8.59. So that's an annualized number, so it's basically saying you've done 8.69 per year for the last 5 years.
Our cash benchmark? Is that just standard what we?
You don't even have a benchmark. There's
Okay.
not even one in the IPS.
Okay, good.
Yeah, so-
Yeah, just because,
Yeah, the benchmark's noted down below, it's 55% S&P.
okay, good.
40%.
Okay, good.
Yeah, and 5% Any questions at all on the numbers?
No,
Are you still taking
well.
Are you
Yeah,
still taking
great,
more,
you know.
Yeah, the market was,
Individual bonds.
surprisingly a lot better than we had anticipated it would be.
I haven't been doing it right now just because the rates are so low. I mean, I was looking at 3-year, he was asking if I was taking money out of the mutual funds on the fixed income side and buying individual bonds, because that's the plan going forward. But with interest rates so low, I'm looking at 3-year bonds with an A rating that are paying like 1.8%. So I'm just going to let the managers inside the fund, I'm keeping a very short duration with the funds, so I'll let them do it until rates rise. And then I'll continue that plan to roll out of the mutual funds and into individual bonds. But you can see, I don't know if you remember a couple of years ago, the fixed income number on one of them, we lagged really bad.
Yeah.
We've corrected that quite a bit. You can see we're outperforming on the fixed income across the board.
Yep.
What's the return that we're getting on the money market?
0.01.
10 basis points.
It's like a rounding error.
Yeah.
Yeah.
Well, we're using a government or a treasury money market fund,
Yeah.
so we're kind of required to do that, given the type of account this is. So we're not stepping out using commercial paper, or you're familiar with the types of short-term paper that can be used in a money market. We're not doing any of that.
Yeah, that's what I'm wondering why
All treasury.
we're tracking, you know, like.
Yeah, I think the system just throws that in there. It's not part of the benchmark. The target to cash is 0. The only reason we have it is because we got to pay bills, we got to pay the retirees.
But we continue to think the stock market will be positive for the rest of this year, especially on the international side.
He's doubling
You
down.
said it.
He's doubling down.
I know.
Make sure we get that in red.
No, the talking heads are saying we're due.
For a correction?
Yeah.
Yeah, we absolutely are. We haven't had one in over 12 months. Typically, every year, there is a correction in the market, and a correction is just a 10% or more downturn. And I'm sure you've seen the chart. If you look back for like 50 years, we've had pullbacks, corrections of well over 20%, where the market always comes back and finishes positive. I'll actually bring that chart next time. It's good to show. But that's why you try not to time the market, and you just stick through the volatility and just have a plan in place and try to stick with your overall asset allocation. So we're convinced that we'll have a pretty good year this year. Probably not as crazy as last year. I think it's going to be a little bit muted, but we will see some volatility coming up.
We could overreached a little bit with the Trump rally. Now reality setting in. Like
Yeah.
I think I had mentioned before, it's one thing to say all these things and everybody was very enthusiastic about it, but it's another to actually get stuff done. So we're finding that that process will gonna take a little bit longer.
Healthcare came up short, tax reform is looking less likely.
Exactly. Yeah, and now he's going back to the healthcare thing, saying he's going to wait on tax cuts and tax reforms and go back to the healthcare first. So.
So you notice that even the
Infrastructure's in doubt.
Mm-hmm. Yeah, absolutely.
That would be a good place to probably get started.
And that's,
Badly needed.
and it's a long-term process. The infrastructure takes a long term to get into the economy and really start
Yeah, yeah.
to see the growth.
Yeah.
So, yeah, so to your question about, everybody's talking about pullback, we had a huge run up at the end of the year. The first quarter was up 6%, so we've had a huge rally, and really nothing's changed other than his talking points. So I wouldn't be surprised if we had a correction in the next 3 or 4 months.
And you're comfortable with that, not expectation, but possibility?
Yeah, absolutely. Yeah, it's typical to have a correction, it really is.
And you know, if, I'm looking back here in my head, but if we're, you know, taking in 1.2, paying out 1.3, we really are not risking current capital to pay our retirees. What's at risk really is the $20 million that's sitting in there trying to grow.
Yeah, it's the interest that you're not earning.
Yeah, well, the growth, yeah, either way.
And don't forget the assumption rates, right? On-
Yeah,
Which
this
we
is
dropped.
our-
We dropped the assumption
So
rate,
this
so
is
the
our
contribution's gonna be
So
a
we're
little
going
higher.
higher.
Yeah.
Which I think, you know, long-term, we're looking very short-term, you
Right.
know, we're saying,
Yeah.
what's gonna happen in 2017? You gotta think about what's gonna happen 10 years from now. So we develop a policy around the actual assumption rate, and how we look to invest this account. So
It's
so far, it's been
long-term.
right on track, and that's the key.
Yeah, it's not good to try and time the market, time the downturn, and play with all that
No.
stuff as far as I'm, right?
No, and in the last month, I've had more clients call, I have a lot of individual clients as well, and all want to go to cash. That's usually a sign, don't go to cash.
Yeah, yeah.
Yeah.
No, long-term, this is the right allocation.
Mhm.
I mean, it's a great balance between the volatility and the growth that we need. So if we go a little further, which we can, we got the bands, so we have the ability to stretch a little bit, and we have done that in the past.
Yeah.
But, you know, it's, the higher you go to capture more return, the more risk you take, and you get caught.
And
So
even-
this is a good balance.
And if you go to the quilt page, you can see there's been a rotation,
Yeah.
if you will, as far as the US has been a place to be for the last 6 years, whereas international's been out of flavor. And now emerging markets are leading the way. 3 of the top 4 this year are international. And value, which led the way last year, large cap value, it came in second actually. That was all part of the Trump rally with banks taking off towards the end of the year. Excuse me. And what's really charging large cap growth this year, which is the second best performer, is the technology sector. Technology sector is up about 12% versus the overall market up about 4%. So that's what's driving that. Banks are negative for the year, energies are negative for the year
Energies are negative for the year?
by 8%. Yeah.
Yeah, banks went way, way, way up,
Yeah.
and they had come down.
Yeah, if you look at most banks, they've corrected. Parts of the markets have had corrections, so the financial sector's had a correction, energy has. If you look at the consumer discretionary sector, the one that everyone has said to stay away from, it's one of the top performers this year, and it's driven mostly by Amazon, Disney, and Home Depot. They account for like 90% of that sector's performance. So.
Interesting.
And then I have the OPEB in here as well, that's what's under tab 1. So the allocation is almost the same, 66% in equities, 29% in fixed income, 5 in cash. You can see from the bottom right, we did 9.58.
That's pretty healthy, too.
Mhm.
Yeah.
Yep. And the only really difference is in here, I have one value manager in here at the JP Morgan Equity Income Fund. Other than that, the whole thing is the same. In the fixed income side, we're just using ETFs.
The 9.58 is a one-year return?
Yeah.
It's almost 2 years old now, the trust.
20 months, that's it?
Yeah, well, the OPEB may have been in place, probably was a deposit account, I think, at one point.
Yeah, I think it was just sitting
I
in
think
there,
Kathy
checking
had
it.
set it up. I think I had set it up.
And then it
We didn't even have this account yet. And she called me, and said, I need to set up a deposit account. And I said, fine, I'll do the pension plan, let's do that. But, yeah, we pulled it out of there, we set up the trust. I think the accounting firm, or maybe the actuary, or both, were saying it would make sense, it would reduce your liability if you set up a trust and actually invested it. So-
It just seems like longer.
Yeah. Well, I'm sure, you know, the OPEB has existed and there were funds in a deposit account, but it wasn't, management to it.
Is there anything here that we need to be concerned about or take action on, or just continue to let it ride?
Continue to live, just go with the same allocation.
So, pretty comfortable basically overweight on equity, underweight on fixed income.
Do you have any minutes last year, and I know he did this, in the beginning of the year, he said, it's going to be muted returns, it's going to be very low, and you
He's saying
change your
that.
assumptions, and I bet no one, that,
We'll have to look.
We'll see what 2017 brings, but I'll take it. 10% return, he was pretty good.
I know.
He was pretty good. So even on a real return basis, inflation's pretty low, less than 2, but still, if you factor that in, we're still over the assumptions in plus.
Yeah.
So we're growing the portfolio.
Just, so we're at 9.58% return over the last 12 months, and we're at 4.22% over the last 3 months. Does kind of indicate things are still going along pretty well.
Yeah, that's through March.
Yep.
So, and that's the tail end of the Trump rally. And it started to wane a little bit in March, I think, but, you know, things have kind of slowed down a little bit in April. So, we've had 7 days where the market's gone down. But our overweight in equity captured that run. And maybe a correction would be the right thing. We're going to have a prolonged probability is going to be quite high. But it will be a short-term event.
Keep buying.
always keep fine. Dollar cost average.
I'm doing it in those cake plans.
Think we're good?
Yeah.
Yeah.
Any other questions
Thank
at
you.
all?
Sure.
Thanks, guys.
Thanks.
Thank you.
Very much.
Yep.
Yeah, it's okay. Somebody may want. No, there might be an employee who comes in because it's their money. Yes.
I guess we'll see you guys in July, so.
It'll be much warmer in here then.
Thank you very much.
Thanks, guys.
Good night.
Good work. Okay, our next item of business, we have no old business. Our next item of business is going to be to go into executive session pursuant to Connecticut General Statutes 1-206B to discuss strategy and negotiations with respect to pending claims or pending litigation. Can I entertain a motion to go into executive session?
Motion?
So moved. Is there a second?
Second.
Seconded by everybody else. Peg, your choice.
Yep.
All those in favor of going into executive session, please say aye.
Aye.
All opposed, no. All right, we're gonna just take a minute, shut the cameras down, and have staff
Just let me.
head out, and then we'll